How's it going, everybody? It's 4th of July weekend, and what else to do than stare at stocks, right? Wanted to get this video out sooner than later this week. First thing I do before deciding anything is look at SPY and see what it looks like. On Friday, I mentioned possibly shorting SPY around 437. However, one thing I have noticed this year is we typically get two bounces before a short occurs. I talked about we would possibly get this kind of this move and then back down and then back down, maybe retest 409, 408 area. But as you see, it kind of bounces a couple times on a trend line, 1, 2, before it corrects. 1, 2, this one actually just chopped sideways. So one thing to pay attention to when you are trading stocks, if you see a stock go like this, then it's going to go like this. If you see a stock go like this, then it's going to go like this. So I like how we curved and then went up, and we might just keep going up. If we would have, made more of a climactic move like this, then we could really crash. So I'm not sure I want to short SPY quite yet. If we completely take out this whole candle, so 432 area, then we can start coming back down again and retrace down here. I've also noticed this year, these big sell-offs really only happen when the Federal Reserve is talking. So, I don't know. We'll see what happens. If we get below 432, we'll definitely get in puts. If we kind of do this thing again, we'll get in puts up here. So we'll see what happens. But we're also up 1, 2, 3, 4, 5, 6, 7 days green in a row. So, and we're getting to what is prior. We talked about this channel before. That when it's in this channel, it just can keep going. When it breaks below it, then you gotta watch for these dips. So my expectation would be maybe get a little dip, go up more, and then get a big correction. But if we break into here, then we can just keep chopping up and just go crazy high. So that's kind of what I see first. Because we're at 7 days green, I would expect we might get another day green, 8-day green up here, and then some red. So what I want to do, because all of my calls from last week kind of failed, which was a complete bummer. Everybody had a crappy week. It started out great, and then just everything broke down. SKLZ, this was perfect to go up here, and it just failed for some reason. When you have very little volume on stuff, then your plays just aren't going to work. So I don't want to look at any calls this year or this week. All I want to do is look at puts, and I want to look at the ones that we missed last week that I called, that we should have gotten in, but I was too busy losing money on my calls to pay attention to the newsletter or the swing trade watch list. So Zillow did exactly what I thought. It broke down here, bounced, and it's going to keep going down. Now our problem is going to be breaking through here around 114.50, 115 area. So if you're scalping, which is the best idea in a choppy market, is just to get in and get out, day trade, that's it, don't swing trade. But if we can break the 114.50 area, then we can go back down to 106, 107, and possibly back to this trend line, which would be down here to 75 bucks, because again, I think anything housing is in a bearish outlook. Look at VNQ. I didn't notice this till today, but we have, minus the COVID crash, we have 1, 2, 3. I didn't even notice that when I was talking about shorting it. But we also kind of broke this trend line here, and so I would expect it might try to curl back up and bounce again. But we are already in, I'm already in 80 puts for September or October, I don't remember, because when you zoom out, you've got support in this area, 73, 70 area, and I think we're extended. And now that I see that we're hitting resistance already, or again, I wish I would have seen that and got up here, but I think we're just going to continue to break down. And for this month, our first target will be like around here or down here, 90, 94. But in the future, I believe we're going to come down to the 70s. Our stop loss will be kind of big on our October ones because we have so much time, so we can hold it and see if we bounce here again. So 105, 106 will be our stop loss for that. As far as our July puts, let's just get out if we break 103.25. 103.25 right here. If we break above here, then it can go back up. So our time will just run out. We'll just lose money again. So what we'll do is below 101.50, get in 100 puts, 100 puts, and write it down to first target will be 97, next target is 94 is what I was thinking, 94. So breakdown from here, it could go pretty quick. There's not a whole lot of volume in between here, so it could move pretty quick, but break below 101.50, target 94.50, stop loss 103 on VNQ. Zillow group already broke. Our target will be the bottom here where all these buyers come in, 107. We might get a green day here, but if we break Friday's low of 117, then you can get in like 115 puts and ride it to 107 or possibly lower if we get a housing crash, because lumber is crashing. LB lumber LBS. So lumber, everybody talked about, was just getting crazy high. It's already crashed, but I don't know. We'll see what the housing market does. Lumber and gold are interesting if you look at the relationship between them. Take time to do that on your own. I can send some links, but anyway, other ones I called last week that I forgot about was Remax. It kind of just chopped sideways, so we've got an even better entry here. Under 32.50, or you could even get in early and get a closer stop loss. you've got what this is now resistance area because it was support. So 34.26, whatever, 34.25 can be your stop loss. We had a pretty good chop here. We broke up and we failed. And if we get below this again, 33.39, 33.40 area, then we can start really seeing a sell-off and get back down to down here, $29.50, $29. So 33.40, you can make your stop loss, give it extra room, make it 34.20, and target $29 on that one for July. You can get July 16th is probably the best to get on all of these. When I say July, I mean middle of July. You can get July 30 if they offer them, but they just cost more. So we'll see how that does being so close to this. But again, I kind of want to just get in and out and not hold for more than a couple days. So Remax looks good short. Zillow looks good short. One that everybody keeps asking about why I'm in it is Mattel. This has nothing to do with housing, but I just wanted to talk about it real quick. We did have a pretty good sell-off here, and it started to chop up. So my stop loss would be like 20.55, and I'll get out. However, we have a really good bounce off prior support. So, I mean, make this trend line your stop loss, because we bounced here, fell. We're going to try it again. If we break it, then it can go higher, but if we bounce again, then we can start getting a real good sell-off. And our next target will be 16.50. So if you're in 19 calls for 10 cents or $10, whatever, you go 19 or puts 19 puts for $10 and it goes to 16 or 17, that's $200. Just 200% 2,000% return. 2,000% return, I believe. Yeah, because $10 to $20 would be 100%. $10 to $30 would be 200%. So $10 to $200 is 2,000% return. Sounds good. 2,000% sounds good. I like Mattel. Short. Anyway, let's get back to housing. That just popped in my mind. Some other ones I want to look at. Sherwin-Williams. My wife's about to repaint our house, but I like it short because it's just too high. Everything's too high. This one might go a little bit higher, but we've got a good tight range. This was our flat top. We broke it and we broke back in it. And so let's say under these candle bodies, 274 area. How about under Friday's low? Get in puts. 265 would be our first target, but I mean, it looks so climactic that I think we could get a deeper move back to somewhere like down here. That'd be August, but let's shoot for 260. You get in 270 or 275 puts, and we'll make it to 260 by the end of July. Or get August calls and ride it to 240. But Sherwin-Williams looks good short. I got a bunch of these, but they're all in the same thing. LEN looks good. Let's see if this works. Let's see if the Illuminati has anything to do with this. If you did, this was 100, and if this was 50, let's see if that's 0.618. Let's see. Oh, not 618. 0.786. Look at this. Look at this Illuminati stuff. Crazy. Wish I knew how to do all this stuff. From the higher high to the low. It came back. It's gonna bounce there. Look, 618 with support. Creepy stuff, man. Anyway, it's gonna crash. It's gonna bounce, come back down. First target would be 90 bucks again. We did kind of get a break and retest, but it was kind of a weird one. I don't know. We'll see. It was also, let's say, under. Let's just get in that one. Market open on Tuesday, and just make this our stop loss. 102.35 area. 102.20. I don't know. 102.25 is our stop. Target is 91 bucks. There, we might come down and then chop around and then keep going, but I like LEN puts. There's a bunch of these. TREX, kind of same thing. Now this one has been chopped down every time it hits this area. Kinda on the weekly, it looks better. So it looks kind of like Apple. It looks just like Apple. Got here, broke. Got above it, broke. Got back above it, broke. Getting back above it. We might come back up and fill this green candle. So we might wait on that one. But TREX looks good under $100. If that fails, under $100, and then our target will be right here. Where'd my line tool go? Right here, wherever. 87. 100 to 87 would be a pretty sweet move. We might make a head and shoulders and get up here, and then we'll get an even better entry. But let's say under 100, just go ahead and get short on TREX. PHM. This one looks like the previous one, but it's just starting, so we might get another move higher. Let's wait on that one. Mohawk. Let's wait on that one too. HD, that'll be our last one. This kind of looks like a buy setup on the weekly. So a buy setup means it goes down and then goes back up, and you buy when it kind of breaks this consolidation area. So what did I see in this one? Because I wouldn't normally short this thing. Maybe it's just so many green candles. Let's wait on HD. Don't do that one either. So we got Zillow, Sherwin-Williams, or Z, SHW, LEN, RMAX. All of those are for puts. And MAT is a put. We can do bank stocks still. They look good to go lower. This guy is just ready to just... Right? JP Morgan. Same thing. JP Morgan, as soon as it breaks, either bounces here or bounces. Looks like it stopped here. This area here. So, second it breaks this, then look for a move down and get in JP Morgan puts. We're already in C puts because I thought it did break. But what we might do is retest and bounce I don't know. Let's go to the hourly here. Yeah, that's kind of what we did. Kinda. I don't know. Anyway, it held pretty good, and underneath 70 bucks, you can get in more. You can add to your position. First target 67 again, but then the next target is like somewhere down here. So $60. Banks are doing the exact same thing they did in 2008. You can Google that too. Oh yeah, here's what I like about Citigroup. So when you kind of get in this area, sometimes it's not a line. I think I said that last week. Sometimes it's an area. You just, when you're in this area, that's where banks take profit, right? So that's going to be just your resistance area. And then when you get below that, it can really start dropping. So we might come back up, retest it, and then get in again. We'll make our stop loss 71 bucks. Make 71.20 the stop loss for Citigroup, just in case it does come back up. But it tends to sell off pretty good. That was COVID, but man, I really think COVID was going to be a correction anyway, and it just got, exacerbated with all the news that was going on. But it was going to come down anyway. So I still consider COVID crashes as part of a pattern, because I think it was already going to correct before this part happened. So and we've kind of got like a crash, break, and then it looks like it's gonna just keep going. So first target would be $56.50 area would be your first target on C. That's about all I got as puts. I don't want to go long on anything this week because I'm tired of being burned. CRM, let's look at this one objectively real quick. This was our video last week, and I said, I don't know, these colors are backwards. I don't know why I did that. This would have been resistance, and this would have been support. But anyway, so the buyers are down here, sellers are up here. We broke above the sellers, so I think it can keep going higher. What's all this? We don't want to do Fibonacci. This is craziness. I wish I knew what it was. Wish I knew how it worked. We really need to break 250 area to keep going higher. So we'll see. If we break back under Friday's open, let's get out and just move on. And it'll be this year's snow, or this month's snow. And under 240, I'll give it a little room. Under 246, if it gets in the middle of here, just get out, because it can fail. And then it might just keep, if it breaks below here, then it can just really keep going. Because it bounced a little bit. It broke up, bounced, went up there. So it'll probably go higher. I'm still in CRM. I rolled my Friday calls into this Friday, so we'll see. What I want is an explosive move, because we've had such a tight range here that really our first target will be 266, 270, 260, 270 area. But with this, I think I'm going to add some CRM. If we break 250, I'm going to add CRM shares in my long-term portfolio, because it looks to just go, broke out, retested, and just go for the next few months. It looks like a really good wedge breakout. So CRM, let's keep that one. Oh, and then bonds. I told everybody I sold everything except for I sold Wish. Sorry. I sold AHT. I dumped it. I dumped everything. Except for bonds. Bonds I think can still go higher. It's a daily buy setup. Let me show you how this works. So when a stock reverses direction, it's not just a double bottom necessarily, but what you need to do is wait for confirmation. So we had a good sell-off on bonds. Nobody wanted bonds because the stock market was doing so well. So they don't like bonds because bonds are low yield, like 2%. I think we're at 2% yield right now. So they didn't want bonds. They wanted stocks who are making 150% this year. So they sold off. And then they got to March and they're like, I don't know. The market's pretty high. I'm going to start getting back in bonds. So they've been slowly getting back in bonds. And what you do is when you watch for what they call it a trend reversal, is you break out, you chop around, you break down, chop around, you break up, retest where you broke it, and then bounce. Right? So now we've got this kind of flat area, 140 area. We were struggling to get over. We got over it, came down. Now this area, which was resistance, is now support. So we bounced. We bounced really hard that day, and I should have just taken some profit, but I didn't. So we came all the way back down. We bounced again. We bounced off this support. So a buy setup means you go like this. Wait, I want my pencil. Hold on. You got breakout, retest, take off, and you would buy like right here, and you ride that for just a swing trade. But for a core trade or a long-term trade, you can buy there, and then every time it dips, you buy more. Buy the dip. So we had target there. That became support. Came down. It's going back up. So you should have added at 144, but it's not too late. Add in here somewhere. It'll go up here, and then we'll keep going, and then we'll run into this resistance around 152, 153 area, and we'll decide what to do then. But we're actually in 160 because I was anticipating an even higher move because bond yield is crashing. US 20-year. US 20Y and TLT are inverse of each other. So just like bonds sold off and then they chopped around for a while like this, chopped around, it broke out, retested. We had that really good drop right here, but it bounced all the way back in. And so we've got this downward channel, and since we already broke it, I think we're going to break it again, and it sure looks like it. So I added some bonds here. I added TLT when we retouch this line, but I think it's just going to keep going. And so your first target here would be, you could use this. This is what I do. I use US 20Y to decide when to sell bonds. So when you get to here, so when bond yield is 1.56, I'll sell some bonds, and it might come back and then keep going. Next target would be 1.43, and then if we start getting into negative bond yield, that's when stuff gets crazy. But that's not going to happen for another couple years probably, because the Federal Reserve is just going to keep printing money. So that's about all I got. MQ, that was a cool one. I found this on accident because I typed in MQ. This looks cool. Over $30. This is an IPO. When an IPO IPOs, whatever the opening price was, $32.50, you double it, and that's what your target is. So we've got, so small. Let me do this, 4 hour. So we had a downtrend. We broke it. We've got a bottom here. And like I said, on IPOs, they just change direction. They don't necessarily have to set up patterns. So over 30 bucks buy MQ calls, if there are calls. I don't know if there's calls on this one or not. Or buy shares at 30 bucks and ride it to 32 would be 64. That might be fun. I found that on accident. NASDAQ is going up because Nvidia is going up. It broke above our trend here, so the expectation was to break again and just keep going, so I'm no longer bearish on the Qs at this moment. Let's see if we can find any patterns. Yeah, that broke and bounced, went higher. Zoom out a little bit. See if we can find any other resistance here. We could go all the way up to, this one's not as easy to do as the, oh, look at this though. We got 1, 2, 3, 4, 5, 6, 7 green weeks in a row. I don't know, man. I think that's gonna pull back. We're almost there. We're almost there. If we bounce off this again, buy puts. Now, this one is the climactic I was talking about. I said when you... So here's an example. When you get... And probably if you put a moving average on, it'd be easier to see it. Let's do like a... So when you get away from a moving average, it tends to pull back. But when you get these, now, I mean, you can't rely on that because obviously it can just keep going higher. But here's what you want to look for. When you see curves up, then that's when it comes down. If you get just like slow and steady things, then it's just going to keep going higher. So if we get a curve up, which is starting to do already, but see here we had kind of a curve, went higher, curve, went higher, curve. But now if we can go, let me make this a little more clear to see, but if we can go up like this, then you can get puts back to the moving average around here. So watch Qs for short, but maybe not yet. Let's short the housing market first, and then we can all buy cheap houses. So I hope you guys have a good rest of your weekend. Keep all your fingers, and hope to see you all on Tuesday on the $19 to $1 million challenge. We're gonna try that. Probably what I'm gonna do, so when you have, kind of like on CRM, when you have this consolidation area, you look for a big pop. So what I'll do is I'll buy like one's way out of the money, but you just look for 2 to 1. So so if we bought calls when this breaks out at 113, we brought 125 calls. As soon as our $15 call went to $30, 30, that's a horrible 3, whatever. As soon as our price doubles, we get out. So you're not waiting for it to get to 125. It might or it might not. Well, all we're focused on in the small account challenge is the price that we pay. And what I'm going to say is, just to give it the benefit of the doubt, always buy at the ask price and shoot for double the ask price as your target. So if you get filled at 12 cents, then even cooler. But your start target's still 30, and it's double the ask price. So we'll try that. We'll see how many weeks it lasts until we all lose our accounts. And talk to you guys on Tuesday. Thanks.